Talking of the economy, it's time for some business news on the programme now. Those Brexit talks will be resumed again. They're going to resume again this Monday as well, with a trade deal remaining on a knife edge. To talk about the economic impact of a disorderly end to the transition period, we're going to cross to Yuka Roya, who joins us now from our business desk. So, Yuka, what will happen then if there is no trade deal, which some might say is looking increasingly likely?
Well, if in that case, what will happen is that the UK will lose its access to the EU's single market, and tariffs and other trade barriers will kick in overnight on the 1st of January. Now, the European Union is the UK's biggest trading partner. Last year, it accounted for 43% of British exports and 53% of its imports. For the EU, the UK is the bloc's third largest trading partner after the China. And now, but the cost of a disorderly exit, as you mentioned, will be significant for both sides. Not only that tariffs will kick in, but there will also be border checks and other controls, which could cause chaos. One forecast by Allianz Research puts the loss in exports at 33 billion euros for the EU. It estimates that a no trade exit will knock 5% off Britain's GDP, cause a 15% drop in its exports, and leads to a 5% rise in inflation for several months. All this when both sides are having to deal with, of course, severe economic damage from the coronavirus pandemic. It could also blow to the British pound. Sterling fell 8% against the dollar after the Brexit referendum in 2016, and it has dropped about 20% against the euro in the past 5 years.
Yuka, Britain says it simply wants a trade deal similar to the one between the EU and Canada, but it's not quite as simple as that, is it?
It's not at all. And of course, it took years, first of all, for the EU and Canada to agree a trade deal. And while it removed most tariffs on things like Canadian wood products, it's far from being the kind of zero tariff, zero quota trade deal that the UK and EU may want. It also does not cover the financial sector, financial services, which are very important, of course, for the United Kingdom. Has trade agreements with other countries as well, removing most trade barriers. The FTA with Singapore, for instance, is similar to the current transition period arrangement with the United Kingdom in terms of access to the single market. But the volume of trade, of course, with Singapore is much, much smaller. The problem is, like with Canada, all those deals took years to negotiate, but the UK crashing out of the transition period means that it will suddenly default to tighter WTO rules, World Trade Organization, meaning tariffs and checks will automatically kick in. The UK will also have to respect the WTO's most favoured nation treatment, which means that it has to treat all trading partners equally, except those with specific free trade agreements. Now, for its part, in October, Britain signed its first post-Brexit free trade agreement with Japan, but it will lose the other easier arrangements it had with those that have free trade agreements with the EU.
Yeah, you could just add to that, and we're getting more briefings coming out of us. Michel Barnier, the Brexit negotiator, rather downbeat about the prospects of sealing a new trade deal. He's been briefing the EU's national ambassadors in the last half hour. Let's go away from Brexit. Finally, Yuka, China has seen another big jump in exports in November, hasn't it?
Well, China's manufacturing activity is back to pre-pandemic levels already, and now that the latest figures confirm that global demand continues to be high for things like personal protective equipment, electronics, and also other orders jumped ahead of. Now, exports in November jumped 21.1% from a year earlier, almost double analyst expectations. Imports rose at a much slower pace at 4.5%, leaving a trade surplus of over $75 billion in November. Trade imbalance with the US also widened, and some tensions are set to remain after a new Biden administration comes to power. Now, meanwhile, media reports say that the US is preparing to impose economic sanctions on more than a dozen Chinese officials over a crackdown in Hong Kong, and that has led to on the financial markets, shares in and Shanghai dropped on that news, while the stocks in Tokyo also fell on some profit taking. The only winner this Monday in Asia was South Korea rising.
Yuka, thanks very much. Yuka Roya there from our business. Sorry about the slight break-up there at the end of what Yuka was saying. Hopefully you managed to work it out.